Wuffi is definitely standing out. The Wuffi token almost 3x'd in the last week, while the rest of the market didn't do much. Let's have a look at the on-chain metrics. Let's try to find out who's buying here, who's selling here. Is this potentially a meme coin to buy at this time? Now what we are looking here at is the performance in the last week for the tokens with a market cap in the ranks between 300 and 400. So those are definitely not the largest tokens. We are looking at tokens with upside potential, and Wuffi seems to have, besides upside potential, also positive momentum. This is then how that looks on a chart. We're up 50% today. As said, we are almost up 3x this week, and we are up almost 500% this year. Of course, not without drama. We did see our pump and dump in between. Now, I'm not going to walk you through the website because this is not how we can get an edge in the market, right? We want to look at data most people aren't looking at. We want to know things most people don't. Thus, we want to have an approach to time bottoms and tops properly. Now, the main risk with meme coins is manipulation. If there's only a few insiders that pump and dump the coin, then we don't have really an edge. What we want to see is long-term adoption by a lot of people. We want to ride the current wave, because if there's more and more investors buying into meme coin, that's potentially positive. Now let's search for hints of potential manipulation. Let's compare numbers. On the Solana chain, we've got 26,000 holders of Wuffi. On Twitter, or the X platform, we've got almost 700,000 followers. Now this is odd. Normally we don't see such a discrepancy. Why would there be almost 30 times as many followers on Twitter than holders on the most active chain? Now, one possible explanation could be usage on chain. So maybe we don't see all the holders on Solana. Maybe the holders are hidden somewhere in black boxes in the gate IOs, etc. of this world. And yes, this might be part of the reason. Most trading volume happens on BitGet, which is a centralized exchange. However, the decentralized exchanges are still very significant. We still see a lot of trading volume on them. If we add those two together, we are at 38% of trading volume. Now, there are many ways to analyze a token, and one very crude way, but potentially still valuable, is to simply look at the number of buyers versus sellers. And we don't need any advanced tooling to see what's going on. Have a look at this over here. This is dexscreener.com, and we can see the buying volume versus the selling volume in the last 24 hours. So the price went up by 48%, and we see that the buying volume was 206,000, while the selling volume was only 169,000. So there's a delta of roughly $37,000. And because there's not a lot of liquidity on chain, that delta in buying versus selling can push up the price that much. Now, what I like to look at is the buying volume relative to the number of buyers. So what's interesting is that the buying volume is outpacing the selling volume, but at the same time, the number of buyers is much smaller than the number of sellers. So we've got only 40% buyers, but 54% of buying volume. In other words, the buyers that are buying much more in terms of dollars than what the sellers are selling. Or to describe this in layman's terms, it's the whales that buy a lot, and it's a few small retail investors that might sell on the way up. Now let's get a bit more advanced. Here is some data from a tool that I've developed myself. That's, by the way, also available to the premium members. Link is down below. You can plug in any Solana token into this tool and look at the exact same numbers. What we see on the left is the number of first-time traders in purple versus the number of recurring traders in orange for any given day in the last 30 days. And we see how this started to peak on the 24th of October. So that's over here when the rally started. We see how the numbers are now declining somewhat, but please ignore the last data point because this day is not yet over. The same happened for the number of token transactions. It started peaking on the 24th. Here's the trading volume by trader segment. So small retail are wallets below $1,000 worth of the token. Medium retail is up to 10,000. Large retail is above 10,000. And so we've seen a lot of trading by small retail from the beginning of May up until the middle of August. That's when the price went up quite a lot, by 160% roughly. We can also see this in this chart over here, right? The trading volume was quite elevated, and then it stopped. And with the trading volume crash came subsequently the price collapse by 70%. And so on the right side, we see the same data as on the left, just normalized to 100%. And so I find this data very fascinating because it seems like up until the middle of August, it was a lot of small wallets that bought the token, that traded the token, and then the price also went up. And once that stopped, the price collapsed. But actually, I believe that that trading volume by all of those small wallets was not natural. And here's why. Check out the following over here. This is the number of wallets that have at least 400,000 or 4 million or 40 million worth of the token. Now 400,000 tokens at the current price is roughly $500 worth of the token. So this is $500, this is $5,000, this is $50,000. Already since the middle of April, those numbers tend to decline. So it looks like this is just shuffling around of internal funds. This is not natural. Do you really believe that there is more than 11,000 wallets that have $50,000 worth of the token and the total liquidity on chain is only 500,000? I don't think so. How is it possible that so many small retail wallets traded the token and that subsequently collapsed when at the same time the number of holders that have $500 worth of the token continued to decline? I believe some kind of wash trading algorithm was pushing up the price, was trying to generate some attention. And when that stopped working, when the price didn't rise anymore despite that effort, that's when they turned off the machines. That's when Wuffi was not trending anymore. And that's then when the manipulators cashed out. And so again, the rally that we're seeing in the last 24 hours is definitely not natural. We don't see the number of holders going up. We probably see a lot of bot accounts that got just generated and that now trade the token against one another. That's of course somewhat of a pricey endeavor, right? Because $400,000 worth of trading volume minus the 0.2, maybe 0.4% decentralized exchange fees. That's still several $1,000s in fees to generate that attention. But sometimes a token that rallies even because of manipulation can generate enough of that attention to get more people on. So that's why sometimes meme coins have this flywheel effect, right? Everything else is red, but the WUF token is up. Now, I personally don't like to buy tokens like this. I like to buy either tokens that see organic growth by a lot of retail investors, that we don't see just a pump and dump. Or alternatively, I like to buy tokens where I see smart other traders buying or where I see influencers buying, and those influencers might afterwards promote the token on their YouTube or on their Twitter. So have a look at this. This channel has a premium membership. The link is down below, thebitcoinstrader.com. We are tracking various top traders, various whales. And we have seen one of those whales buying constantly into the BOOE or the Book of Ethereum token since August of this year. We then started discussing this in our various channels, right? We've got various dedicated altcoin channels. And this is how the price subsequently developed, right? In the last year, more than 1,000% return. Making money in crypto is both a game of luck and skill. And the more information we have, the more we know that other people don't know, the better. That's how we buy assets smartly and how we avoid the manipulated stuff. For example, over here, we are tracking influencer Alex Becker. We've got 12 of its wallets. Not all of those wallets are well known. Or we are tracking influencer James Wynn or influencer Crypto Gains. We've got 436 wallets now in total. They give us signals regularly. And instead of buying what's currently green and be exit liquidity to manipulators, we buy things before the influencers promote stuff. It's all about timing. It's all about finding the right information sources. There's even a tutorial just on finding the right wallets in premium. Actually, not just one tutorial, there's a whole tutorial course. There's 8 videos on that topic. How to find various influencer wallets, how to find related wallets, how to track those wallets, how to interpret those wallet alerts. In total, there's more than 100 tutorial videos now. There's also a money back guarantee. So simply just message me within the first 7 days. If you don't like what you see, I'll refund you 100%. So I'm personally staying away from Wuffi. I don't want to guess how much longer this manipulation can last. If you got some value out of this video, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you in the next video or see you even in premium. Cheers!